Welcome to this lecture on foreign income. So what we're going to talk about is some revision on foreign dividends. That's what we'll start off with. So if you have shares in a foreign company and that foreign company decides to pay out dividends, they are called foreign dividends. Those foreign dividends are included in your gross income. Now, very important reminder here, and this is for everything in this section, please remember that if an amount of tax has been withheld from the dividend or from a foreign dividend, you need to include the gross amount. So that's the amount before the tax has been deducted in your gross income. So for example, taxpayer X receives a dividend from a foreign company. Taxpayer X is entitled to 100,000 rands. In terms of the tax laws of that foreign company's country, there's a dividend withholding tax of 10%. So this means that taxpayer X will receive 90,000 rands in his or her bank account. What's important is that taxpayer X will still show the 100,000 rands in gross income. So you'll say foreign dividend, 100,000 rands, and not 90,000 rands, the amount after tax. Yes, that's what you received, but we always include the full amount. Why? Witwatersrand Association of Racing Clubs case. Right. Then we have the exemptions for foreign dividends in section 10b. Now there are two types. It's either 100% exempt or it's partially exempt. And this is just a revision for you. Remember, if section 10b2 applies, it'll be 100% exempt. Okay, so let me use that same example of 100,000 rands dividend. Alright, so you'll put 100,000 in, and if section 10b2 applies, it'll be 100% exempt. However, if section 10b3 applies, you will have to apply a fraction. For natural persons, it's 25/45, for companies, 8/28. So let's assume that this was now a company. So the exemption in terms of section 10b3 will be 100,000 times 8/28. And that gives us 28571 as our exemption. So when do you apply section 10b2? So let me explain it like this. You apply section 10b3 if section 10b2 is not applicable. So when is section 10b2 applicable? A lot of this is excluded from your syllabus. The most important one, section 10b2a, though, says if you have 10% or more of the shares in the company, then it is 100% exempt. Then, if you receive a foreign dividend from a company which is listed in South Africa, so this is a dual listing, and it's not a dividend specie, it's 100% exempt in terms of section 10b2d. And if it is a foreign dividend from a listed share and it is a dividend specie, then you will apply section 10b2e. So these two work the same. The one is a specific for foreign dividends in cash, and the other one is for dividends in specie. Most important one to remember, most popular, section 10b2a. So watch out for the shareholding percentage.